Hey guys, it's Robert Greenblatt. Welcome back to the channel. Today, we are going to try to figure out how long can this last. We have appreciation of real estate, we have interest rates rising, and quite frankly, a lot of people are being priced out of the market. So again, welcome back to the channel. It's Robert Greenblatt. Please do me a favor. If you like the information that you hear today and you find it interesting, please smash that subscribe button and give me a thumbs up. All right, here we go. So I have some real numbers I jotted down on a piece of paper to review with you. I was on a listing appointment the other day, and those folks had purchased the property 3 years ago. Actually, just slightly less than 3 years ago. It was winter of 2020, just before all the COVID stuff hit. So we're reviewing numbers with them, and I'm going to give you the real numbers. They purchased this property in the winter of 2020 for $208,000. Okay, may not mean much to you. We're sitting in their house 3 years later. They did a couple of minor updates, but overall the house is exactly the same. Shows very well, very nice house. $208,000 less than 3 years ago. Today, that house is being priced at about $315,000. What is that, about 30% increase? So here's some real numbers. So that's basically worth $100,000 more than they paid for it. And guess what their motivation is for moving? Well, we might as well cash in while the market is still hot, because it kind of is. There's still a lot of buyers shopping out there, and the prices aren't really coming down, even though there are some reports that there are more price decreases in the industry than there have been in a few years. At least in this area, we're not seeing a very significant change in the pricing. So they bought that house for $208,000. They're going to sell it for about $315,000. But here's the reality, right? Those numbers are nice to talk about. They're good for statistics. But in reality, when any of us, or most of us, are making a large purchase, typically a home, a car, maybe fortunate enough to purchase a boat, most of us are thinking in terms of the monthly payment. What can we afford? What do we qualify for? And what's our comfort zone? So I'm going to talk to you in terms of monthly payment, and I think it's going to become crystal clear why this trajectory has to change. We can't keep going this way. So I did some hypotheticals. So when they bought this house, if in 2020 their interest rate was 4%, now, for this exercise, for all things being equal, I assumed in this calculation the buyer, or them or any buyer, is putting 20% down and utilizing conventional financing. So using those assumptions, in 2020, when they purchased this house, if they put 20% down and the interest rate was about 4%, taxes, insurance aside, 4% interest rate, 20% down, they would have needed about $41,000 as a down payment. Their payment would have been $1,203 per month. 20% down at 4%, payment would have been $1,203 per month. Today, very different story. So I did a couple of hypotheticals here. So $1,200 bucks a month, right? Roughly. A couple of hypotheticals. If someone buys that house right now, the interest rate is roughly, and I use for this assumption, 7.25% at a $315,000 purchase price. So now here's a very interesting thing. The down payment from 2020 to 2023 went from $41,600 to $63,000. So the down payment for somebody putting 20% down went up by over $20,000 on this property. So assuming somebody has $20,000 more saved up in the last few years as a down payment, the interest rate of 7.25 will give them a monthly payment today, mortgage only, no taxes, no insurance, mortgage only, of $1,719 per month. So in just a few years, not only does somebody who's shopping in the market need an additional $20,000+ for their down payment in this scenario, they are making a payment, a monthly payment of $500 a month more. Unbelievable, right? Now, here's where it gets even more interesting. At the time of recording this video, it is the end of 2022. The interest rates are about 7.25%. If this same house was being purchased at the beginning of 2022, and in order to not overly complicate this, let's assume it was $315,000 at the beginning of this year too, although that's not quite true. It was probably a little less. Let's just assume $315,000. The interest rate was about 3% all day long. The difference today versus earlier this year, about 11 and a half months ago. Today, $1,719. 11 and a half months ago, $1,062. So roughly a $700 difference in payment just this year alone. Can the real estate market keep appreciating while the interest rates continue to rise? I don't know. What do you think? Please leave your comments below. These numbers tell the whole story. Comment below. Again, please like, share, subscribe. Do anything that you can to help support this channel. More great information coming back at you. Thanks for tuning in.